All right, guys. Good morning and happy Monday. Hope you all had a good weekend, and we got no time to waste here, guys. We got a lot to cover, and I got to do the open in the options room here in about 20 or so minutes. So we'll jump in, guys. But pretty crazy move there on Friday. Big short squeeze on Friday. So in terms of the bigger picture, we're going to look at a little bit bigger picture. Then we're going to talk about a few short-term ideas. But as far as the bigger picture goes, I don't think the bottom is in. So I don't think the bottom is in, but I do think in the short term, possibly even just into Thursday or Friday, I do think we can look for a little bit more upside here in the market, so long as the lower time frames can hold the bullish structure that they built last week. So as far as the big picture goes, guys, major thing to keep in mind here, we look at the weekly chart of the S&Ps. We can't forget we're in a weekly downtrend. And in a weekly downtrend, that's where you're going to see some of the biggest rallies. And these rallies can do a pretty good job of, fooling us into thinking the bullish market is back. So in terms of focusing on structure, keep in mind you have a weekly squeeze here. It's 2 weeks into firing to the downside. So typically with a weekly squeeze, we're looking for maybe 5 to 8 plus weeks of Momo to the downside. But the other thing to consider is a couple of weeks ago, we're down here at probably -3 average true range moves under the weekly 21 EMA. So it's a bearish weekly squeeze. It's a squeeze firing short. Right? We're clearly in a downtrend, but we're so oversold here. We could typically rally all the way back to that weekly 21 and still technically be in a downtrend. So in terms of, hey, is the bottom in? Is the bullish market back? I can't think the bullish market is back pretty much until we cancel out that weekly squeeze. And in order to cancel out the weekly squeeze, you're going to have to see the S&Ps rally all the way to the weekly 21, close above the 21, and basically bring that squeeze to an end. So, no, I don't think the bottom is in. But in terms of the short term, mainly because we got so oversold and because we're going into a big expiration on Thursday with the quarterly expiration, I think the shorts could be trapped here. I do think we could see a bit more upside. So a few major things here, guys, for the S&Ps. All right, big push on Friday. We got the close above the key 380 level. And basically it all happened on Friday, right? Tuesday, Wednesday, Thursday, a little bit of a chop fest. But then you get the big shebang on Friday. So we got the close above 380. We actually got a close, not by much, but technically, it's worth something. We did get a close just above that daily 21 EMA. And then if you guys look over here at the big 3 bars, on all the lower time frames, the big 3 bars have gone from bearish to neutral. And you've even got a green big 3 bar on the 15-minute chart. So that alone is a huge improvement. We were sitting back down here. We had the red big 3 bars and a daily all the way down to a 15. So in terms of trying to find that moment in time when the market is too oversold and when we might turn around and get that reversal, that's pretty much what I'm looking for. We reach the point where every time frame is bearish, then you're looking for signs of exhaustion. So good progress there from the S&Ps, and on the QQQ, really big push on Friday. So this closes, well above that daily 21, and you have no active sell signal here. No big, no red big 3 bars, and you got a green big 3 bar on the 15-minute chart. So the Qs have transitioned from, basically as bearish as possible to a little bit more neutral here. So definitely some improvement as far as the structure. Definitely some improvement as far as the big 3 bars go. And then one more thing, guys, to potentially add to your notes. As I mentioned, this Thursday is going to be a big expiration. Right? Thursday, June 30th is your quarterly expiration. So again, something to keep in mind. Typically what the market likes to do, maybe a couple weeks out from expiration is really a couple weeks out from these big expirations, I should say. They like to try to get the market leaning heavily in one direction. So in this example, you get that huge flush. Everyone's getting bearish. Everyone's getting a little bit freaked out. Now it kind of feels like potentially everyone might be trapped short. So for Thursday's expiration on the SPX, you've got some pretty good open interest here on the put side. 3,900, 3,950. You've got some pretty good open interest all the way up there to 4,000. So food for thought here. With pretty big open interest on the put side all the way up to 4,000. If indeed the market is looking to punish the shorts this week and make sure that all those puts expire worthless into the big quarterly expiration, we could see a push, I think, all the way up to about 4,000. So I do think the stage is set for a bit more upside, where I think the bulls will lose control. And make sure you have this level marked up on your charts. For the S&Ps back under 380, basically erasing all the Friday's progress, I think that kills the bull shot at taking the market any higher. So expect a few dips here, especially after a push like Friday. Even on an hourly chart, we're pretty overbought here. So the bullish structure doesn't necessarily break if we pull back towards 380. That's your hourly 21 EMA. You would just want to make sure the market holds at 380. So I think the bulls got control for the S&Ps above 380, and for the Qs here, I think the major level to watch in the Qs is going to be about 285. Again, basically erasing all the Friday's progress. So huge move. I think you expect some sort of dip here, and we might not get it. But if you do, I think you might look to buy the Qs all the way down to about 285, and we're looking to get long the S&Ps all the way down to about 380. A few other things to watch, though, guys, in terms of trying to put the pieces of the puzzle together here. We also want to see VIX, ideally breaking Friday's low, and then ideally you can see that continue to trade lower. Again, if you're going to expect a little bit of a dip in the market, this thing's got a little bit too hot on Friday, with a little dip in the market, you probably get a little bounce here in the VIX. So my thinking is, as long as the VIX is under that daily 21 EMA, and if it can continue to fade lower, that kind of points towards more upside in the market. And then one more chart for you before we jump into the good stuff. Make sure you keep an eye here on the dollar. The DXY, pretty straightforward, guys. If the dollar can trade lower, that's a bit more confirmation the bulls have control of the S&Ps and the Qs here. So if you're currently bullish on the market, pretty much you're looking for the Dixie to break under that daily 21 and continue to trade lower. So keep that on your watch list. But as far as a few setups here, guys, we'll take a quick look at the futures. They're pretty flat. S&Ps are flat. The Qs are flat. So not too much happening here ahead of the open. But all right, guys, a few potential trade ideas. Again, this is all short term. I don't think the bottom is in. So from my perspective, whether we're looking to get long the S&Ps, the Qs, Tesla, Roku, whatever it might be, for now at least, this is all short-term thinking. And obviously, if the S&Ps and Qs roll over, Tesla's not going to trade higher, Zoom's not going to trade higher. So as tends to be the case, it's all a little bit contingent on the market behaving here. But for starters, crowd favorite, we're going to keep a close eye on Tesla this week. So again, market willing, we're looking for a push here towards that daily 50 SMA. You might as well call it $800. 800 sounds a little bit sexier than 791. So pretty much looking for a push here close to about 800. And as far as the structure goes, a few things to note here. Not only on the daily chart, but also on the lower time frames. Before the S&Ps and the Qs got moving, Tesla was one of the first names to go completely neutral on the big three bars. So you got rid of the red big three bars on the daily chart, the 4-hour, 2-hour, etc. And now you have the green big bars, the buy signal on the 30-minute and the 15. So while the market is generally still getting tossed around, Tesla, one of the first names to kind of go neutral. You get this shift of momentum, then you get that close above that daily 21, and now at least based on Friday's action, it's looking like Tesla might have a little bit of a market behind it. So if this can hold that daily 21, guys, we're looking for this 15-minute squeeze to potentially try to trigger the move here into higher prices. And You get the green big three bars here on the 15-minute, and you get the big three bars here coming in on the 30-minute chart. So Tesla will fall apart if the market falls apart. But if the name of the game here is punish the shorts, we're looking for Tesla towards 800. And that pretty much gets invalid if this starts to close back under that, that daily 21 EMA. So I don't think you want to give it much more room than 700. So we got a put credit spread that expires this Friday on Tesla. And then next up here, guys, is Zoom. So kind of along the same lines, but what's really interesting here about Zoom, way before the market, tried to put in the reversal, way before the Qs, the S&Ps got back to their daily 21, Zoom was really making some progress here. So this clears the 21 back in late May. And as a general statement, it's held above that daily 21 ever since. Cancels out the sell signal, the red big three bar on the daily chart. Total shift of momentum on the histogram. And now you got this thing sitting here in a weekly, 3-day, and daily squeeze. And we got the green big three bars on a lot of time frames, the 2-hour, 1-hour, 30-minute, 15-minute. So Zoom's looking pretty sharp here, guys. In the options room, we did have a nice trade on this last week. We sold ourselves a little put credit spread, and we took it off on Friday as it pushed towards 2 ATR. So the preference here would be to buy on a bit of a dip. Again, given it's a little bit extended up here near +2. But if we can get a dip, ultimately we're looking for a push back towards 130-ish. So that could be a dip to... Here's where it gets tough, right? I mean, Friday's move is big. Not just for Zoom, but for pretty much the whole market. That puts Zoom up here at 123. Your hourly 21 EMA is $5 lower. So the point being is, we could see a pretty good intraday flush. These still maintain bullish structure. So if we don't get a dip, we're not going to chase it. But if we do get a dip, I like the idea of jumping back into some put credit spreads here. Short term, though, guys. Short term. Then next up, guys, is Google. Google, as you might call it. Beast mode on Friday. I think it was up 5.5%. But more importantly, before the market tries to get anything going, this cancels out the red big three bars on the daily chart, a few weeks ago. So along with Tesla, along with Zoom, before Amazon, before Apple, before Microsoft, this was one of the first names to go from bearish to neutral as far as the big three bars go. All you typically need is a bit of a market behind it. So, beast move on Friday. You close above your 21, you close above